See, starting the stream on YouTube. Okay, looks like we are live on YouTube. And I don't think I screwed anything up, which is always good. Hey, people. And I got some people join on Instagram. Let's get this thing flowing. What's up, J-Bor? What's up, guys? So for my people on Instagram, oh my god, 35, 40, 41 people. Yo. So everyone on Instagram, also dual live streaming on YouTube if you want to see my screen. And then for the trivia questions that I'll just be asking throughout, the official answers will be on YouTube. But like I said, I'm showing my screen on the other stream. So if you want to see what I'm looking at, go check that out. But happy Tuesday, everyone. This is like the third bi-weekly stream. So I'm trying to switch it up between like Instagram and TikTok and then stay pretty consistent with YouTube because of the OBS Studios is pretty great. The fact that I can just share my screen and it's completely free. I can't believe it's even free. What's with the stack of shoes? What do you mean? That's where I keep my shoes. I don't have a thing for my shoes. I just put them all in a stack. What's going on, people? So Tuesday, got a little volatility in the markets today for sure, and a little bit of a pullback. It seemed like volatility was like completely sucked out. If we look at the VIX, I was talking about it on my post. I think it was Monday, but how we were flirting with like 19, and we even got into like the 18 handle. And looking back at like COVID, obviously, like a huge downswing in volatility, which makes sense, right? Everything is kind of expected at this point. The economy's reopening. Everything. There's no surprises out there right now. So the VIX being at 20, when you look at like the history of the VIX, even if you just look at the 5 years or the past 5 years, right? I mean, like 2016, the VIX floated from like 15 to like 10, so extremely low. So 20 seems low, but historically, volatility is actually still kind of high, which is surprising because we've kind of been used to this high volatility environment where if anyone's selling options, Tasty Nation, Tasty Trade, all that stuff, you're seeing the premiums go down, and it sucks, but you got to remember at 20, it's still historically kind of high. And then finally, can we talk about yields? I don't know, because it was funny because I was talking to a coworker, and like the joke is now the headlines, whatever's happening in the market, it's just like all about the yields. So it used to be COVID. Now it's just like what's going on with the bond yields. If the market's up, down, it has to do with the yields, right? So what's interesting is finally we have some consolidation where the yields aren't like spiking every single day. So, a little bit calmer in the sense that the yield is kind of consolidating, which I think is good. And then, you have a pullback in the financials. So a lot of the bank stocks that were running extremely hot have cooled off, which I think is healthy. A couple weeks ago, I was selling off a little bit of my financials, JP Morgan, Bank of America, just like trimming positions, but they continue to run. And then the other thing, looking at like a ticker symbol like TLT, which tracks the 20-year Treasury bond, it's just an ETF. But if you look at the chart on that thing, you can see that it was getting in that oversold area, where for bond ETFs, it's basically an inverse. So yields go up, bonds go down, bonds go up, yields go down. So when TLT is getting crushed, that means yields are going up. So it was a little bit of the oversold area. So I think a bounce back in bonds, it makes sense. And then with that kind of decrease in the yields, we get a little bit of a relief for tech. Now, what was interesting is our buddy Jerome Powell came out today. And I feel like the guy's been saying, the same thing, like for the past 3 months, and everyone every time he says the same thing, people are trying to interpret it a different way. Honestly, the guy just keeps on saying, like, we're gonna keep the monthly buying of bonds every single month. I think it's 120 billion. Yeah, 120 billion a month in bonds. And then they're not going to raise interest rates until you get unemployment rates back at levels pre-COVID. So I don't know. The guy, he keeps on saying the same thing. His view on the economy is kind of, well, they classify as like cautiously optimistic. So he's basically saying like the economy should reopen, but it's going to take a couple of years to kind of recover fully back to pre-COVID levels. Now, depending on what market you're in or the stocks that you're looking at, I mean, like tech stocks in general, 2020 was actually an amazing year for those stocks because, all of the, the money and all the business that they got exploded to the upside. The question is it sustainable, and have growth stocks kind of run ahead of realistic valuations? That's the question. Portnoy better than Buffett? Yeah, sorry, I'm just starting to read comments because I was just kind of talking. But yeah, Portnoy better than Buffett? I don't know. That's a bold claim. Let's see. So what I did want to start off, let's start off with one trivia question, and let me actually pull it up over here. So give me 1 second. We'll start that because that's always fun. People like the trivia. Oops. Okay, so how it's going to work with the trivia is if you're on YouTube, and it's going to be whoever responds the fastest. What will happen is I'll just say who is the winner for the trivia question, and then you just have to join the Discord, which is free, and just DM me. That way I can get your information, like Venmo, PayPal, all that good stuff. So the first trivia question for tonight is, what is the term that measures how sensitive a stock is to overall movement of the market? In other words, it measures how volatile or risky a stock is compared to the market average. What is the term for that? I'm going to type it. Penn and DraftKings. Yeah, Portnoy's his net worth has exploded with Penn this year. It's kind of crazy. Sam, no, not Delta. Rice Plower, you got it. Yes, it is beta. So I will mark that one down for you. And then, like I said, just DM me on Discord after, and I'll hit you up. Yeah, delta is for options, but stocks can also have delta. Basically it's 1. But yeah, the answer was beta. So yeah, what else is going on? So get this, the Robinhood announcement came out for an IPO. So, our boy Vlad, even though they've gotten so much heat They're still going ahead with the IPO. Obviously, people are still going to invest in the company. I think, they are sticky in terms of, customers staying with Robinhood. I think even though they got a lot of backlash with the whole GameStop thing, that a lot of people didn't leave. Like I went to Fidelity, right? I mean, part of it was it was time for me to move to a brokerage firm with like the portfolio that I had, just to get better customer service, more tools. Like one thing that drove me nuts about Robinhood was, one, you didn't know what your cost basis was when you sold, so you didn't know like throughout the year what your taxes were. I think you may be able to email them to get that information, but for me it was just like I should be able to click a button and get that. So right now, like that's my favorite thing about Fidelity, even though it's the simplest thing, is I can literally go into my portfolio, click a button, and it's an Excel download of all my positions. So yeah, it's interesting. Can you trade Robinhood on Robinhood? I think you should be able to trade that because if you're on TD Ameritrade, you can trade TD Ameritrade. So no, there's no issues with not being able to trade Robinhood. It would be interesting actually if like somehow Robinhood gave people on the platform like first dibs on the IPO. That'd be pretty cool. I don't think they're doing that. Jonathan, Robinhood's going to flop just like Snap, all about the bad CEO. Yeah, it will be interesting to see what happens with Robinhood because a lot of the recent IPOs are still getting hyped up, and they're going to be valued at 50 billion, and then all of a sudden they're going to open at 100. I mean, that's what's been going on since 2020. I mean, a lot of these IPOs are going way above what they're trying to raise money for. So we'll see what happens with Robinhood, just because you're right. I mean, at this point, their image is a little tarnished with the whole GameStop thing. We'll see if they redeem themselves. I mean, with Robinhood, I think what they need to do is keep on adding services and features that don't exist on other platforms. So a big one, I think they have to go big on crypto and really get started on creating a wallet where you can actually use it. You're Hayden Ray's watching on both IG and YouTube. You the man. Appreciate that. But yeah, they need to focus, I think, on cryptocurrency and allow people to use it. I think kind of do something similar to the Cash App or Coinbase and kind of be this financial app where you can use cryptocurrency, invest. Really, they just kind of need to turn into the Cash App, which does all of that right now. And then Coinbase is missing stocks. Speaking of Coinbase, what was interesting is that they're delaying their direct listing. Now, they're not doing an IPO. They're doing a direct listing, which is different. But yeah, they'll be trading under Coin, and I guess they're moving back to April, obviously, instead of March. I think that was, I mean, it's not like today's news, but it was yesterday's news. And I just thought that was interesting. Airbnb is still something to look at. Airbnb is one of those stocks where, like, I wanted to invest, right? It opened at like 165. It dipped down to like the 120 level. I'm always like greedy with my kind of trying to scoop up stocks like really cheap. I mean, not that Airbnb going under 100 would be really cheap. It's just trading at a crazy premium right now. So I never actually bought into Airbnb. I wanted to. It's on the watch list. But my target price to like get into Airbnb is way below where it's at right now. So we'll see. Maybe one day it gets taken out and I can add to it for a long-term position. But right now I'm not in Airbnb. Robinhood's free stock bonus would be Robinhood stock. I don't know. That would be funny. They like force people to buy and hold Robinhood stock. That would be a Robinhood move. I'm skipping class for this for your information. Hopefully it's not an important class. And it's not a class where you have to actually be there to get credit. Hopefully it's one of those classes where you just have to show up to take tests and then you ace those tests and you still get an A in the class. DoorDash is still overvalued, right? I think it should be around $50 to $80. Let me pull up DoorDash because I'm kind of curious where it's at, because I know that thing also opened at what, the 180 range. It went all the way up to 222, and now it's like a 131. I mean, for me, DoorDash isn't like an exciting company, food delivery. It's one of those things where, in the COVID situation, they did super well. Unless they are in, I don't know enough about the company to know if they've branched out into other areas, but I don't think there's a very high barrier to entry on food delivery. So unless they have a monopoly on food delivery, I don't really want to own it for long term. I just think it's one of those things where they don't really have like a competitive advantage. I think there's a good buy for leaps on Skills and Palantir after the last few weeks. I am bullish on Palantir. I know people have talked about Skills. It's related to gaming. I don't know enough about it. But Palantir, I am bullish long term. I think even as it trades down to kind of these lower 20s, when you look at it versus 45, it looks cheap, but you have to remember, just because it traded at 45 and is trading at 24 or 23 right now, it isn't ridiculously cheap. I mean, it's still a premium. Honestly, if it gets to like $17, $18 and like the price to sales ratio gets more in line around like 30, because the price to sales ratio right now is still 40. Their compounded annual growth for the next 5 years is like 30%. So I think it's a good stock to own. I mean, the target addressable market that they're in, is massive. Data analysis, automation, cybersecurity. So it's definitely a company that is on the radar, and I have a little bit in terms of stock, very small percentage, but of my portfolio. But definitely something that I'll continue to dollar cost average into. Even if it trades sideways and the revenues kind of catch up to it, basically I'm just waiting for the market to hate it, and then maybe I can scoop it up cheaper. But for me, Palantir is a good long-term play if you're okay with short-term volatility. But leaps, I don't hate leaps with Palantir. You just need a turnaround in growth stocks. Fastly, I'm still in Fastly. Nothing has really changed for me there. When I did the video on Fastly, it was kind of the same situation. A lot of the videos I did on growth stocks, I kind of knew going into buying a little bit that they weren't like cheap, because you're paying for that growth. But in terms of the edge computing and that space in general, I think if you want exposure, Fastly is a good company to do it. Morningstar has good fair value estimates on stock. Yeah, Morningstar's good. What Bachelor of Science did you study? Have you completed the CFA exam? I'm not a CFA, but I did study finance and accounting in college. OPK? Don't know what that is. I'm just reading through the comments right now. I'm probably like a ton of comments behind. Oh, actually, no. I think did someone mention Intel? I actually wanted to talk about Intel. Because what was interesting, hey, Kaleche, what's up? So we're talking just stocks, and I'm just going through people's questions. But someone mentioned Intel, and if we look at that, the news that came out today, I just saw an article on Yahoo Finance that Intel is actually investing $20 billion into another 2 factories in Arizona, which I think is pretty big news. And sometimes when a company announces that they're going to have some huge capex investment, some people may look at that poorly, but it seems like the market liked it, because after hours, Intel is up 6.5%. And so for a stock, market cap 257, and really is considered more of like a value play, Intel has had a really good run. And it was funny because I invested a little bit back in like October, November, when it was actually like in the 40s. And, of course, like looking back, it would have been great to load even more. But everyone at that point was basically saying Intel is dead and AMD is the future. Now, AMD, did catch up to Intel in terms of processors and like their capabilities. And Intel really screwed up with their ability to fabricate their microchips. So that was hurting them. They switched CEOs, which I think is huge because the old CEO was a finance guy. So he was more about, he just wasn't thinking about the future and focusing on the tech instead of, he was really focused on like the financial statements and kind of like manipulating with like financial engineering. I mean, for me, I don't need that with a company unless it's very short term. So obviously the stock, since switching CEOs and kind of switching kind of back to like looking at the future, Intel, looks like a good stock. The PE ratio is still 12.85. But anyway, back to like October, November, it's just funny how everyone was hating on Intel because it was all about, we'll just make all the chips in China and, we'll just ship out the designs. And then, I think it's TSM that basically makes all the chips for like all these companies, and AMD, is basically, they're not producing their own chips, I don't believe. Maybe I'm misspeaking. But as you were saying, Kaleche, on YouTube, the recent chip shortage and then the risk of globalization, right? So if your supply chain is 100% dependent on another country, and we're talking about something that is pretty important to technology in general, in a way, Intel is pretty smart about doubling down and saying, well, we'll make chips here. They may be more expensive, and that's just like an investment kind of in like the U.S. manufacturing environment. So if everyone goes to China and then there's some issue with the supply chain, that could really screw everyone up that is reliant on that one company. So if like TSM is the only company that makes chips, I don't think that's good. There's a lot of risk to like, okay, we're relying on one supplier. That's probably not great. So I think Intel investing into two factories is actually good news for Intel investors and should bode well for the stock. Not gonna lie, I was very against Intel and gonna dominate, so I regret not buying Intel. Yeah, it was one of those things where everyone was saying Intel was just gonna slowly die as a dinosaur. And I mean, it's not like, all of a sudden because they're building factories, it's like an amazing company to own. They still have to execute. And that's what everyone will be looking at, because like Intel was trading below a PE of 10 at some point, so they were pretty undervalued. Let's look at some comments on Instagram. Actually, let's do one more trivia question. We'll do the next one before we go back to comments and see what you guys are asking about. Okay, so this one is, when there is an increase in the price of goods and as a result your purchasing power decreases, what is that known as? And I will paste it in there too. I bought it Sam, you dog. You bought it 9p. Sam, you're always looking for those P's that are under 10. Cold Fusion made a really good documentary about their fall. I think they just got complacent. And Sam, you got that one. Or CMT Financial. It showed up first. Let me just mark that. Yeah, I think it's one of those situations where Intel got very comfortable with where they're at, and so they kind of took it easy while the competition kind of caught up to them. All right, cool. That was trivia question number 2. So we were just going through comments. Let's see, what else do we got? What's up? Oh, what's up, Ashton? You still in here? What's up, fam? Where did you learn, mate? Honestly, a lot of the stuff I learned, I mean, is self-taught. I mean, sure, going to college for finance and accounting helps, but I believe now you don't have to go to school necessarily in finance and accounting to become a decent investor. I mean, everything can be learned online. The internet has provided a lot of free knowledge. You just gotta research, small topics and just keep curious. Workhorse. No opinion. I just know they lost that huge U.S. postal contract, which basically was like they lost like half their value, which is crazy. I think you're a very cool and smart guy. Well, thank you. Where did Iron Condor and ADM? I don't know. Does ADM even have good implied volatility? 3 trillion stimulus. Yeah, well, it'll be interesting to see with that stimulus, and if they pass that infrastructure bill, which would help my infrastructure plays. I got some materials, industrials, Nucor. So we'll see if that actually gets passed. Bitcoin prediction. Bitcoin has been kind of hanging in there, honestly. What is it at right now? I should know it off the top of my head, but it's been floating in this $50,000 range, 50 to 60. I mean, my opinion really hasn't changed that much with Bitcoin. I think the bull run is still intact. So, I mean, my strategy is very, very simple. It's cut and dry. Dollar cost average every month. You reach a certain amount in your net worth, if it's increasing like it has, or you just trim back and take some profits, put it on the sidelines, and hey, if we crash again, maybe you start to put a little bit more into your dollar cost average. But I'm not like trading in and out. I mean, I think at the end of this cycle, I kind of agree with Sam, who mentioned, like 140K minimum. Well, I think we break 100,000 in this cycle. I think we do maybe get to like 150, that range, and then after that, I'm not as confident, and the risk is more to the downside, I think, in the short term at that point. But at 50,000, I mean, you still have probably a 2 to 3x move from here. But like I said, I don't have a crystal ball. It's kind of just my opinion on Bitcoin. But right now, I'm just holding and trimming as we go higher. Opinion on NEO. I don't invest in NEO. For me, a lot of the electric vehicle companies are still a bit pricey. I know that electric vehicles are the future, but when you have a saturation and every single car company is electric vehicle company, it's not about the electric vehicle. Let's be real. It's about the autonomous driving, and whoever can figure that out first, that would be the company I'd rather own than electric car vehicle. Like, a car being electric doesn't mean much to me, because a lot of the electricity that we generate right now is from like dirty energy. You're burning like natural gas to generate power plants. I mean, that's not always the case, but for me, I don't know, the electric vehicle thing. If every company is projected to dominate electric vehicles, then no company is. I'm a fan. Please do this more often. Enjoyed your video on Square. Yeah, I was happy with the video on Square. I mean, the Pam Bam, no, Bam Bam 007. Yeah, I mean, the plan is to do more live streams. This is basically like every 2 weeks or 2 weeks I'll do one. Just check in, hang out, answer questions, kind of shoot the shit. Way too overvalued. I'm not sure which stock you're talking about. A few years ago, it was all about blockchain. Now it's all about EV and autonomous driving. I mean, I'm excited about autonomous driving. I mean, autonomous driving, AI, kind of these sectors that I feel like we're on the cusp. But we're just not there. But I think, they will be huge markets. And did you guys? I don't know if you guys saw Kathy Wood's projection on Tesla. And as you guys know, if you follow me for a while, like I missed the boat on Tesla. When I remember the Cybertruck came out, and I was just laughing at the Cybertruck because of how ridiculous it looked. And then 2020, I mean, I was wrong about the price, obviously. I mean, I think it depends on how you look at the stock. If you're really confident in the speculative side of like their business that doesn't necessarily exist right now, it makes more sense. If you're all about like just looking at the past and the financials, it makes zero sense. So it's whether, I don't know, it's a tough stock to evaluate because a lot of growth is built in. Bro, I was laughing. Yeah. We'll see what happens with Tesla. I mean, I own Tesla via index fund, so a lot of people own it now. And so now that I own a part of it in index funds, I mean, sure, it can go to 3,000. It was just, it's funny that someone comes out with a price target for Tesla and it's 5 to 6 times higher. But of course, it's the biggest position in ARK. So, like, why would she say anything different than a 5 to 6x return? It's a little biased. I don't know. It's funny. Is XOM a good buy for dividends? I think XOM and Chevron, it makes more sense now. I have more confidence with crude oil at these levels. I mean, if it can stay at these levels, I think those companies are fine just to collect some money. They're pretty debt ridden though. And what was scary is when oil was down in like the 20s, 30s, right? What did it get down to? I'm actually curious on oil now. Oh, oil. So it got down to like 18 in April, crude oil. Wow. But anyway, like in April, it was hard for me to like load the boat on energy companies just because if the pricing was like sustained at like those levels and the amount of debt those companies have, it's going to be tough. But with oil, if the pricing stays good, I think those companies are okay to add. So I don't know, that's the problem with these energy companies, steel, like all these material companies. Like a lot of their value is kind of outside of their control when it comes to like their performance, because so much is dependent on the pricing of that material that like they're involved with, which sucks. But you can make money when you get booms and busts through these commodity pricing. What's happening to Tesla? I think for a stock to double every couple months, it's a little unrealistic. So it's just getting a breather. I mean, look at anyone on YouTube, look at this chart. I don't want to talk about Tesla too much, but like it doesn't matter about the chart, but the market cap, 635 billion. I mean, it was at 900, coming back to 662. It's just coming down a little bit. I mean, it's a pullback. Oh, NFTs. What the heck is going on with NFTs? Non-fungible tokens. I swear it's a way to launder money. It's got to be. Or it's pure marketing for some of these websites. I'm convinced that Like someone will make a doodle, right? It'll just be like a scratch, like it'll just be like a digital art of a line, and someone bids like $25 million on it. Like for me, I think it's all about, that's like the owner of the website that's a total whale buys some art, and then like a million articles go out and everyone's talking about how much money you can make with NFTs, and everyone's like, oh, what's an NFT? And then they learn about it, and then all of a sudden everyone goes to that website because it's like, oh, that dude squiggled a line and sold it for 25 million. I'm not fully convinced that this stuff is like fully legit about like, why are people paying so much for the digital art? I mean, some people are all for it, but I think there's some weird stuff going on there. I'm not fully convinced that like digital art or digital cards, kind of like Beanie Babies for me. Don't get me wrong, I think there's probably some value to it. If someone creates art, I mean, the value is in the eye of the beholder, I guess, but I think some interesting stuff is going on with the NFT market, that it'll probably go through a crash, and a lot of people buying art and trying to flip it. You guys remember it was crypto kitties, right? Whereas like people were buying different digital cats, and for like ridiculous prices, you'd be paying like $1,000 for some like digital cat, and then you were hoping that you could sell this digital cat to someone else for like $2,000. It's the same thing. I mean, eventually, yeah, it was crypto kitties. I don't know if anyone was. It was like back in 2017. It was like one of the first. Crypto. What was it? Crypto cats? I don't know. I'm probably screwing it up. But anyway, it's kind of similar to what's going on right now. Do you have any good dividend plays? I mean, for me, I like the dividend aristocrats. So companies like Johnson & Johnson, that's continuing to kind of just like slowly grow, but pays a good dividend and it's safe. I like PepsiCo. I like the banks a little bit better back at the end of 2020. But their margins are high and they have decent payouts. When JP Morgan was paying a dividend of like over 3%, I was pretty happy with that. So I tend, like, my favorite dividend plays are the ones that kind of range from 1% to around 4%. AT&T is good too, but the problem with AT&T is it's not really growing, so it honestly acts more like a bond, where it's like you're going to get your dividend, but unless the growth really changes their trajectory on growth and focuses on growth more, they have huge debt loads, so it's going to be hard to push the needle. And then, Pfizer is, I mean, you got healthcare stocks like AbbVie, Pfizer, Johnson & Johnson. A lot of these companies are very stable, and they pay good dividends if that's what you're looking for. For me, I like to mix it up. Show us the kitty behind you, please. Where? What kitty? Oh, Tiger? That's my cat, Tiger. I got Tiger and Lily. They'll make appearances once in a while. Oh, because you can see him drinking water. Yeah, nice. Thoughts on interest rates affecting the market in the short term? I talked about Omar on Instagram. I talked about that at the beginning of the stream. I think rates obviously are important, and I think that just the stabilization of the interest rate has calmed the market a little bit. It was just the fact that it was spiking pretty fast to the upside, I think, freaked out people. Coca-Cola dividend play. What is Coca-Cola at? I'm just kind of curious what Coca-Cola is doing. Coca-Cola. Man, slow and steady. Look at that. That yearly chart, 43 to 51. Dividend payout, 3.3%. I don't know. Coca-Cola for me, I would rather own PepsiCo. And the reason I'd rather own PepsiCo is they have a snacking division and they're in food. And for me, PepsiCo has more growth potential than something like Coca-Cola. And if you look at PepsiCo, Yeah, I don't know. Coke, the like there's a premium for Coke because it's so stable, but I don't know. I would rather own something else other than Coke, to be honest. I don't have any Coke in my portfolio. Uh, I just think they have higher headwinds with the whole, healthy. I'm not even gonna call it a phase because I think healthy and organic stuff is becoming bigger and bigger. So, they kind of have to worry about shrinking revenue. And probably from a global standpoint, they're probably growing, but I think they're shrinking in the U.S. PepsiCo, though, if you look at that, they're paying 3% dividend. I mean, the PE is still 27. Actually, kind of similar companies. I just like the exposure to the snack side of things when it comes to if I'm picking PepsiCo or Coca-Cola, I go with PepsiCo. Yeah, yes, Kathy. Let's see. I think I'm behind Kathy the Goat. Gush for the Wind. Is that the leveraged oil ETF? If it got skipped over, but what are your thoughts on the upcoming Coinbase IPO? I need to see where they open in terms of valuation. It's kind of similar to all the IPOs that we talked about at the beginning of the stream. For me, I have a hard time just blindly going into a stock if it's supposed to be valuation at 50 billion and then the IPO is at like 100 billion. I don't know. I kind of want to pull back, but I'm definitely interested in owning Coinbase. I already have exposure to cryptocurrency when it comes to flat. What do you mean 29? J-Boy, I don't know what you mean by 29. But yeah, for Coinbase, I'm interested. Definitely interested in cryptocurrency, but I have exposure through like Square and PayPal a little bit. So yeah, but I'm interested in coin. COIN is going to be the ticker. So we'll see where it opens. Jonathan, you're probably already gone, but appreciate you joining the stream. Palantir me. Your IG is very ahead of your YouTube. Oh, is it? I think it's because what I have set up on the YouTube stream is to be delayed slightly. So that's probably why. Also, let's do another trivia question. I realize it's 7:42, so I'll probably do the stream for like an hour, and then probably call it. But next trivia question is, what is the acronym for the volatility index? So anyone can participate on the YouTube and see who. Okay, yeah, that was fast. J-Boy, you got that. Yeah, no, that's right. You got it. It's the VIX. I've been talking about the VIX a lot, so I'm glad. Yeah, Gary, you got it too, but you have. Yeah, it's the VIX. And like I've been saying in the past couple posts, it's been absolutely murdered. But it got a little bounce back today in terms of volatility. It was like after Jerome Powell was talking, and all of a sudden, you could just see all of a sudden the market started to turn a little bit. We got a little spike in volatility. So that maybe that guy shouldn't go on TV. He screws up our beautiful markets. No, not really. He's the ultimate pumper for us. He's infusing liquidity, so you can't. Couldn't find Gary Grant. Couldn't find the damn send button. Sam trolling. Sam threw me off. Yeah, you guys messing around my chat. What do you think about oil market in short term? I think oil short term. Still has maybe some room to the downside. I look at something like VDE, the Vanguard Energy ETF, which is a lot of oil companies in here. But I was saying that it's currently at 67. like 2 weeks ago, oil was so hot that I feel like it needed to pull back a little bit. So I could see oil coming, or not oil, but VDE, kind of what I use to track energy companies in relation to oil. It's not always 1-to-1, but obviously there's a correlation. So I think you could hit like the 50-day moving average, but like the bull run in oil still is intact. I think if you're worried about kind of inflationary pressures, oil can be a good place. If you're thinking that demand for oil is going to go up with the reopening of the economy and they're not going to overload the supply side, I don't know oil markets as well. I know there's a lot of dependency on price of like OPEC, Russia, kind of like depending on how much supply they want to put into the market, can have a huge influence. Yeah, oil in the 50s, I think oil can just stay here. And that's where, these oil companies are still making money at this range. So it's all about, for me, that's kind of what I care about. Are these companies sustainable with the current oil price? And they've gotten their costs down. So short term, I think there could be some more pain to the downside. Roblox. I don't know anything about Roblox, and it's probably because, I don't use it. I don't know anyone that uses Roblox, or I guess you play on it. It's a game. I don't know. Kids spent hours and a lot of money on it to the moon. The problem with that, I just don't know the business. So, what a trash. Soldier Ben, that's funny. Great day for puts. Yeah, it was a good day for puts. You got downside move plus volatility expansion. That's a win-win. I did not buy puts. I'm very cash heavy right now in the options portfolio. Definitely, just to throw it out there, just because I'm talking about it. But one of the plays that I'm looking at is U.S. Steel. It ran up pretty hard from like the 17 level to 24, 25. I'm interested kind of in selling a put probably around that once it breaks 19. And the volatility for it, the IVR was over 20. And when I look across like all the ticker symbols that I track, U.S. Steel and steel in general, I'm still bullish on, probably up until like the end of 2021. So on any like pullbacks, if the uptrend hasn't really been broken down, U.S. Steel is kind of one of those plays that I can sell puts in there and kind of dip into the same play. And U.S. Steel always has a decent amount of implied volatility. So, one, it has a lot of volatility in the stock. The beta is over 2, but definitely a good trading vehicle. Do you still have a long-term position in Square? Yeah, I still 8A Encon. I do. It's one of my larger positions. It's my second largest to Facebook. If you haven't checked it out, I did a video on YouTube about my opinion on Square and kind of where it's at. Thoughts on Plug still? I don't think I ever really liked Plug. Once again, if you guys don't know my style, I have some speculative plays or like more aggressive growth. But the problem with Plug is, it's a lot of putting the horse before the cart, or the cart before the horse. Is that the saying? But basically, there's a lot of speculation and growth into Plug. So for me, that's not really my style. And, they have to have insane growth and nothing go wrong for it to justify where it's at. You can create, why not, Steve? Better hold over a year so you only pay capital gains. Yeah, I never played Minecraft either. Are you long on INTC or just a short-term play based on how bad it was being valued? I still have some Intel. I think it's around like 1% of the portfolio. So I'm probably not going to add to it. I think it's still, like a hold. I think it's a good solid like value play that you can still kind of hold for the long term. I don't think it's one of those stocks where I'm not as afraid that it's going to like drop out of bed and drop 50%. So that's what's good about Intel. MP announced a stock offering from shareholders and it dropped 18% today. Should I buy? I mean, it depends on kind of why they announced the stock offering. Are they trying to raise cash to invest back in the business? Sometimes people can see it as a positive. Depends on what they're trying to raise money for. That's kind of, I don't know what they're using it for. I know Tesla was raising a bunch of cash throughout last year and no one seemed to care. It's all about why. Do they need cash to pay off debt? What's going on? Okay, let's ask another trivia question. Okay. This is question number 4. So this is defined as 2 consecutive quarters when a country sees negative economic activity. What is it? I definitely would do the ETF Stephen Garafola if you are still trying to figure out the move you want to make. What is are you trying to at someone? Oh, rice flour. 2. That's 2 for you, my friend. Yes, it is a recession. That's the correct answer. Just testing you guys on your financial terms and your business cycles. The Great Depression 2.0. No, it was the Great Recession, right? Didn't we go through the Great Recession? Yes, that was the answer to the question. Let's see. What else do we want to talk about? Yeah, but MP announcing, it depends on what they're doing it for. Let's talk about GME, GameStop, really quick. I saw that they missed earnings. I don't know if any of you guys are in this thing. I mean, I just track it just for the shits and gigs. But GameStop is trading at 154. So obviously, the market didn't love the earnings. I just read like a brief little summary, and it sounds like they named a new COO. Kind of the old news, like focusing on digital. Not much to talk about GameStop. It was just funny that, I guess it's not funny if you're invested in it heavily. But I'm not. I don't really have any skin in the game. It's just interesting to watch how these kind of, I quote them, meme stocks are doing. AMC, BlackBerry, Sundial, I don't know. They all got hurt today. We'll see if there's a slow, I'm just curious if it will be a slow bleed of these stocks, or kind of if they, I guess, flatline at a certain point. It'll just be interesting. They got a new COO, more like more like Game Loss, am I right? Yeah. Yo, you think GameStop randomly running up is here to stay? I don't know. I was very surprised by the second run up. I'm not gonna lie. The first run up made a lot of sense. The second run up was pretty crazy to me. That it was just nuts that it was able to go from 40 to 300 twice within like a span of a few months. So if anyone timed that perfectly, people made a ton of money in GameStop, but it's just pure trick. At this point, I think everyone knows. Well, not everyone. Some retail investors that are just getting into the stock market look at GameStop and they're like, "Oh my God, this thing's going up 50% a day. This is an amazing company." And then they get suckered in. But a lot of people, I think, know at this point, it's just like it's a hot potato game, and the price has nothing to do with the valuation at this point. Nokia is a good growth stock. Is Nokia focusing on 5G? I think Yeah, I mean GameStop. What's crazy to me is how have they not done a stock offering and raised a ton of cash? Like if they were able to sell stock, raise a bunch of cash, they could use that cash to invest in the transformation of the company. I mean, it's a no-brainer, but for whatever reason, the company isn't, going ahead and like trying to raise cash via equity sale, which I don't know. To each their own. Maybe they're afraid of backlash from all their retail investors for supplying more stock to short sell. Who will blink first? Yeah, Nokia's weird. I don't know. Like I said, I mean, I don't know about every single company. But Nokia, it's a growth story. Is it? Where are they growing at? According to this, their year-over-year quarterly revenue growth was negative 5%. Unless they have something that I don't know about. Crocs. What? I never understood Crocs either. AMC did that with the quickness, wiped out their debt. Yeah, I mean, AMC, that's a smart move. Wipe out the debt, but I don't think, honestly, GameStop, I don't think has that much debt. Do they? 1.7, they do. I mean, yeah, why not do a cash or an equity sale, raise enough money, pay off the $1 billion in debt, and increase that free cash flow? Why not? They should do it. Does Nokia still sell phones? You mean like the bricks that you can like throw at the wall? Those indestructible phones? Okay. We're going to do 7:50. Let's do one more trivia question. And then go ahead and answer a couple more questions. And then I'll probably log off just in a little bit. But all right, last trivia question. Which company related to the investing world filed to IPO today? And we covered it earlier in the stream, so this should be like the easiest question ever. You don't even have to think about it. It's a no-brainer. It's a company everyone hates. There's a clue. It's basically whoever can type it in fastest wins. What's your case for AYX, Robin? Fernando Orozco. Yeah, you won. You did it. You got this one. You found the button. Yeah, the company that everyone hates, that should be like their new name. It's just funny because like being in the investing space, you just know like everyone hates Robinhood. But if you don't talk about this stuff all the day or all the time, and you're not involved, it's like, why does everyone hate Robinhood? It's like they betrayed us. Fidelity, Webull. That'd be interesting. I would invest in Webull. Webull's solid. What do you think about growing tech companies beating earnings and revenue? I think at this point, a lot of these tech companies. Their ticker should be hate. A lot of these tech companies are expected to beat. They're expected to have this amazing revenue growth. So when they come out and they say everything that's expected, it's already priced into the stock. It's kind of like buy the rumor, sell the news. If you follow Tick Stocks or Robert Ross, he's talked about that a couple times. But it's common saying, buy the rumor, sell the news. It's already priced into the stock that these growth companies are going to deliver growth. So it's just whether or not people want to inflate the multiples that they're already trading at. M1 Finance is my fave. Yeah, I know they're good about, or they were one of the first ones where they introduced like the slices, or like a percentage of your portfolio. You can always do like 1% rebalancing. I don't have M1, but I've heard People talk about it. I think it's cool. I like the rebalance. Don't they have a rebalance feature? There were answers before he even finished the question. What the heck? Maybe, you know what it is? Are you guys on YouTube? Are you listening to me on Instagram and YouTube? You may be cheating, because supposedly Instagram gets the feed earlier than YouTube. So if you're listening to me on both, you can listen to me on Instagram and then answer the question on YouTube and win. I'm on to you guys. You have to do by hand your commission and yearly. What? Wait, Sam. Which company are you talking about? You guys think Robinhood is bad? Try using Questrade. Oh yeah, Questrade is like the Canadian equivalent. In Canada, I feel like you guys get ripped off because there's like, isn't there like 2 brokers that you can use and they all charge commissions? How does Canada not have a no commission company yet? Like that's like the easiest thing. Whoever gets in there first will definitely just mop up in terms of collecting customers. Also, Tastyworks needs to get into Canada. That's why I answer the question slow. Yeah, YouTube is definitely lagging behind. I think it is a little bit. How and why do high interest rates affect growth stocks? So basically, as bonds become more attractive and you can get higher yields for relatively less risk, people would rather own bonds than, stocks at a certain point. And then also, if you're using like a discounted cash flow model or something to evaluate the future cash flows of that growth company, if the risk-free rate is higher, that increases the discounted cash flow, discount rate. And if that discount rate is higher, it hurts the overall valuation in terms of like today's money. So basically, the higher the interest rates, it hurts it from a valuation standpoint, and stocks may not be as attractive. Jason, the option trader. We have one, the price quoted 15 minutes late. Yeah, I think, but if you have a commission-free broker in Canada, for me, I would still use it for long-term buys. No? I don't know. That's why when Robinhood first came out, I think it was like in 2015, somewhere around there. I was pretty excited for it because it was the first broker that introduced, no commissions, and I was like, oh my God, no commissions. You can trade with $100. You can invest with $200. It's gonna be huge. And I do thank Robinhood for introducing no commissions. I mean, at this point, if you're a broker and you don't offer no commissions, I mean, no one's going to even use your service. Rice Blower, any TikTok growth tips? Depends on your niche, but for me, I would just say consistent uploads. I mean, pretty basic advice, but try to niche down to like one specific area, post a decent amount, and I think just by posting, you learn a ton about like what works, what doesn't. So yeah, Instagram, I mean, it applies to like YouTube, TikTok, Instagram if you want to grow. It's just consistent and have fun with it. It can't, like, not every video is going to go viral. The slippage, yeah, I think slippage for, if you're trading, Robinhood isn't great. And like, if you're trading at all, using Robinhood is kind of silly. But for long-term buys, I mean, Robinhood is still fine. All right, guys, I think I'm probably going to wrap this up. I hope everyone enjoyed joining the live. Like I said, bi-weekly, YouTube, and then I'll switch between TikTok and Instagram. But I'll keep this up. I know people enjoy it. Keep on answering your questions, but appreciate everyone joining, and hope to see you guys next time. Oh, and if you did miss the live and you want to watch it back and just see what I was talking about or see how I answered questions, the whole stream will go onto YouTube. So give it like an hour, it'll load there. And then for any of the people that answered the trivia and got the questions right, I wrote down your names. And so if you're in the Discord, just go ahead, and if you're not, join the Discord. It's free for everyone on the live. Join the Discord and message me there, and then I'll hit you up on PayPal or Venmo. So peace out, guys, and I'll see you in 2 weeks.